China's automotive industry is experiencing rapid global growth, positioning the country as, well, a dominant player in the international vehicle market. In January 2024, China surpassed Japan to become the world's top car exporter, marking a significant milestone in its quest to reshape the global automotive landscape. With over 5 million vehicles exported in 2023, China's automotive sector is gaining market share not only in traditional markets but also in emerging regions, due to the success of cost-efficient electric vehicles. Chinese automakers like BYD, SAIC, and Geely are leading the charge, particularly in the electric vehicle market. In 2023, China sold 13.4 million vehicles, surpassing U.S. sales of 11.9 million, a 23% increase compared to the previous year. These brands have gained substantial ground in the Middle East, Latin America, and Southeast Asia, with a 12% share of the Gulf Cooperation Council market in 2023, up from less than 1% in 2017. However, challenges remain in more mature markets, such as the U.S., due to tariffs and regulatory hurdles. Despite these obstacles, Chinese brands continue to offer high-value propositions, particularly through electric and plug-in hybrid vehicles, which are increasingly sought after for their affordability, advanced features, and range. Factors driving growth. China's automotive industry expansion, backed by the government's strategic focus on electric mobility, has been a major catalyst. Policies promoting new energy vehicles, including subsidies and incentives for manufacturers and consumers, have fueled the surge in EV sales. In 2024, NEVs accounted for 38% of total vehicle production in China, with NEV exports surging by 28.3% year-on-year. Companies like BYD have rapidly scaled production capacity due to both domestic demand and growing international interest. Additionally, China's local supply chain offers a competitive edge, with automakers like BYD and Geely sourcing many of their parts locally. This reduces production costs, making Chinese EVs highly competitive globally. Furthermore, Chinese companies are expanding their presence in emerging markets, where lower production costs and growing interest in affordable electric vehicles make them attractive options. Despite the impressive growth, China's automotive industry faces significant challenges. Trade tensions, particularly with the European Union and the US, continue to be a concern. The EU has imposed higher tariffs on Chinese EVs, with some reports suggesting a 38% tariff increase. Such protectionist measures could hinder the export potential of Chinese vehicles in these regions. Moreover, Chinese automakers face the challenge of establishing strong distribution networks and after-sales service, which are vital for competing with established Western and Japanese brands. The US market, in particular, remains a tough nut to crack. While Chinese EVs are gaining popularity globally, the lack of a robust dealer network, combined with potential political pushback and tariffs, has limited their penetration. The impact of the U.S. presidential elections on trade policies will be critical in determining the success of Chinese automakers in this market. In response to these trade barriers, Chinese automakers have taken a strategic approach to circumvent tariffs. One tactic has been the increase in hybrid vehicle exports to Europe. By focusing on hybrids, which are not subject to the same tariffs as fully electric vehicles, companies like BYD and Geely have seen their European sales grow significantly. In fact, exports of hybrid vehicles to Europe tripled between July and October 2024. China's automotive industry is pushing aggressively to establish itself as a global leader, with a strong government push, industry incentives, and focus on emerging technologies. Although facing trade challenges and potential backlash from established markets, China's proactive strategies in hybrid vehicle sales, low pricing, and efficient supply chains have allowed it to maintain competitiveness, especially in emerging economies like India. The recent surge in government-backed incentives and strategic efforts to expand its market share in the electric vehicle sector including plans to produce 25 million EVs by 2025, will bolster China's leadership position. China is also venturing into hydrogen fuel technology, reinforcing its determination to dominate the automotive industry in the coming years. Despite concerns over national security, especially regarding China's involvement in connected vehicle systems, these efforts signal China's unyielding ambition to shape the future of global transportation. By addressing these challenges and leveraging its vast consumer market, China's automotive industry is on track to secure a leading position globally, making it a formidable force in the industry.